If you have someone with that kind of expertise, proceeding on certain assumptions, proposing a tax like the Texas margin tax, I guess my question is, what could possibly go wrong?
Oh, where to begin?
First, tell us what to call it.
Okay, well, you've mentioned that some folks call it the margin tax, some folks call it the franchise tax. If you spend some time in Austin, I promise you will hear a lot more adjectives used to describe it than just those. Technically, the legal name of the tax is the Texas franchise tax, and Texas has had a franchise tax since 1907. It's just plugged in different calculations along the years. In 2006, we replaced our old franchise tax calculation, which was largely based on net corporate income, with a tax based on a concept which is called taxable margin. So technically, it is the margin tax calculation of the franchise tax. But legally, the name is the franchise tax. And speaking of legally, I'll just comment on one thing you mentioned, is that your all's proposal was being vetted by lawyers. Boy, doesn't that give you great comfort. Nonetheless, I'll just offer a little bit of history on the Texas tax. And really, the margin tax passed not because of the tax it was, but because of the tax it wasn't. It wasn't a net income tax, and there were concerns in Texas about taxing net income because they wanted a tax that would apply to both partnerships and corporations alike. And it's hard to do that with a single income tax. Texas had looked at a variety of alternatives. We flirted with the old single business tax, which was in place in Michigan for many years. And I think a lot of states have flirted with that because the single business tax, like the margin tax, is not quite a tax on gross receipts, and it's not quite a tax on net income. It's somewhere in the middle. So that offers some attraction to it. Texas also flirted with the idea of a straight-out gross receipts tax. That fell very quickly in the political spectrum. They looked at a payroll tax, and that died a quick political death. And ultimately, the legend has it that our former Texas Comptroller, John Sharp, was out at dinner one night, and he had an epiphany of how to create a new business tax, and he sketched it out on the back of a cocktail napkin. And that is the genesis of the Texas margin tax. Now, legislation by cocktail napkin, granted, we're new at that in Texas, but I understand y'all have been doing that for years. But nonetheless, the way the tax works is you start with gross receipts, and from that, a business has a choice of three things it can deduct. It can deduct one of three things: compensation, cost of goods sold, or 30% of your total revenues. And you choose your deduction, and that's one of the attractive features of it, is you get to choose your deduction. Once you arrive at your calculation of margin, you apportion that to your state based on your total sales in the state. The tax base is then, if you're a wholesaler or a retailer, the tax base is taxed at 0.5%. If you're anyone else, then you're subject to a 1% tax. So right off the bat with the rate, you can see there are disparities there. And even though you give folks a choice of their own deduction, there are some disparities. Cost of goods sold. If you're a goods producing company, cost of goods sold is a good deduction to claim. There's a lot in it. If you're a services company, you're not producing goods. So you cannot claim the cost of goods sold deduction. That means if you're a services company, you're choosing between compensation or you're choosing between the standard deduction. If you're a capital-intensive services company, then you can't really choose compensation, so you're stuck. And ultimately, you had this myriad of different industries being impacted differently by the same tax. It has created some disparities. We've had some lawsuits over it, but so far the courts have dismissed most of those. They've determined that while there may be some disparities in the tax, none of those rise to a level of questioning the legality of the tax. I think one criticism of the tax that is constantly offered is the fact that it failed to meet the original revenue estimates. And we were talking beforehand at lunch about that, and I think it's interesting. And I'm a former chief revenue estimator in our controller's office, so I'll identify myself with full disclosure there. But it's interesting how they have basically taken a mistake by the revenue estimators and blamed it on the tax. as somehow it's the tax's fault that it failed to meet the revenue estimator's original projections. The fact is, the tax was supposed to bring in about $6 billion a year. It's ended up bringing in closer to $4. But as
and
far
why
as...
is that, if you don't mind? Because we have had a recession. Is that predictable?
That's part of it. The margin tax has proven, while it is very stable, it is still subject to the winds of economic fortune. More notably, though, is the state missed the amount of the cost of goods sold deduction. And basically, we had no information on which to estimate how much the cost of goods sold deduction was going to be worth. Now, if any of y'all do federal taxes, the term is familiar to you because cost of goods sold is a federal tax term. So the revenue estimators looked at the federal data from the Internal Revenue Service on cost of goods sold and figured, okay, we've got some numbers here, we can use them, but they never quite asked if those were the right numbers to use and never quite dealt with the issue that, well, we use this term, but we adopted a different definition than what the federal government uses. So that was a major problem with the tax, is the miss on cost of goods sold. It probably defines almost all of the miss in the revenue estimate.
However, it did accomplish some of its objectives.
Yes, it did. We have a tax that now applies to corporations and partnerships alike. And in Texas, which is a state that does not have a personal income tax, we don't have a way to pick up income from partnerships. So the legislature did want a tax that would apply as a general business tax to businesses generally. And from that standpoint, it has worked well. It is neutral with regards to the form of business. So I think there are some benefits there. With regards to capital-intensive goods-producing companies, and in Texas, you're talking about oil and gas and manufacturing, which is the heart of our economy. The margin tax is more favorable than the old income-based franchise tax. So from that standpoint, it was a benefit to sort of that core of the Texas economy. Now, it's a different issue in Nevada where you're not trading one tax for another. You're talking about adding a new tax on top. So I'm not sure if that comparison is valid.
Well, don't look at me. I'm not sure either. I'm sure that there are people in the room with opinions on that. And by the way, a little tease here for when we return, we will be asking questions of these gentlemen. So if questions are occurring to you now, you have cards, and you should write down the questions you're thinking of so you don't forget them, so that I can distribute them, so that I can ask them when we return from our email break in a few moments. About the assumptions, so what I said about proceeding on assumptions was partially true in this case with regard to estimating the cost of goods sold. Were there other faulty assumptions?
I think the tax was probably thoroughly vetted by lawyers, but not necessarily by economists and companies themselves, because it did pass so quickly. And I think some of the sore thumbs that have emerged with the tax is if you're a services company and choose to take compensation, if you are a business that operates with your own payroll, hiring your own employees, it works fairly well. If you're a business that hires independent contractors instead of hiring employees, though, you cannot include that as your compensation deduction. Payments to independent contractors do not count as compensation. So you can have two businesses. An example might be an independent trucking firm, where they're engaged in the same line of business, they're competing against one another. One is hiring its own employees, one is using independent contractors. They're going to have vastly different tax bills. You have other instances where if you are a company that you rent tuxedos and you also sell some tuxedos, you're considered to be a services company because you're largely earning income by renting stuff. You don't get to claim cost of goods sold because you're not selling things, you're renting things, and you're taxed at 1%. If, however, you're selling tuxedos and you happen to rent some on the side, you're going to be taxed as a retailer at 0.5%, and you're going to be able to claim a very generous cost of goods sold deduction. So again, you have two companies basically engaged in the same line of business, but with vastly different tax impacts.
Talk about the vertical issue, as I recall from my reading here. If you are engaged in manufacturing and selling, for instance, or give an example of that?
Well, an example is if you are if you're an oil company and you refine your own oil and also sell it. Since you are selling a product you manufacture, you're considered to be a manufacturer and you're taxed at 1%. Even those sales at your retail stores. If, however, you're an independent retailer, an independent service station, and you buy your gasoline from someone, you're considered a retailer and you're taxed at 0.5%. So you could have two service stations across the corner from one another, and one's going to pay twice as much tax as the other.
All right, so this suggests to me, and when I said attorneys were vetting this ballot initiative, I don't know what Mr. Thompson, and you all know who in this room who I'm talking about. Some of you were even in the room when I heard him speak. I don't know that he meant they were vetting it for tax issues. He may have meant they were vetting it to make sure it would withstand a challenge as he tries to get it on the ballot. That's probably, would we agree that that's more likely? Yeah, okay. However, it sounds to me in terms of vetting for all of these many issues that can it be vetted closely enough to anticipate all the eventualities of business? I mean, it has not been a complete failure, although there are people who don't like it. There are people probably who do like it. It's still in place. Oh,
if you're a capital-intensive goods producer, it's a very favorable tax compared to the old franchise tax. And again, you have a benchmark to compare to. So from that standpoint, my advice, I guess, to Nevada is don't just adopt what Texas did, but learn from Texas' experience if you're going to explore the tax, and look at some of those disparities and see if there are ways to fix that. I mean, one thing with the differential tax rates is allow a company to, pay 0.5% on its retail sales and 1% on everything else. But instead, Texas has a bright line test. You're either all of one or you're all of the other. But allow for a mix there. Look at competing businesses. And if folks are using their own payroll or they're using independent contractors, include them both if they're performing the same function. So my suggestion would be to learn from those disparities that we have and look at ways to smooth them over if you're going to make a serious study of the margin tax.
All right, so there are legislators in this room and prospective legislators. If this tax gets on the ballot, that's not the proposition we're looking at. They're not going to have a chance to tweak and mess with it. It will be voted on by the voters. So you understand this tax very well from all sides. Imagine for a moment that you're the campaign director for that ballot initiative. What is your slogan? What is your way of selling the voter who frankly could not be less interested in the dialogue we're having today because the average voter isn't? How are you going to sell this idea to voters?
Well, it's a business tax, and businesses don't get to vote. So, vote for this tax and don't worry about paying it. Someone else will. There for the children.
All right. Thank you. That was a very succinct answer. I appreciate that. Okay, let me take the temperature of the room here. Let me ask you to address anything that I haven't asked you. I'm sure that you wrote a lengthy document about it and you talk about it all the time. There were 50 or so bills in the last session to tweak it, adjust it, fix it. Some of them probably overlapped, but talk about that.
Yeah, with each passing session, and we used to have a sleepy little franchise tax that would draw maybe a dozen bills every session. Since the margin tax went into effect, we have anywhere from 50 to 100 bills dealing with attacking some of those sore thumbs, some of those disparities. A lot of those deal with small business and trying to raise the small business deduction. Some of them, have to deal with some of those disparities. I mentioned the tuxedo rental. Alice Formal Wear actually had their own bill last session in Texas. We see this sort of scattershot approach where folks identify their particular sore thumb and then try and get legislation to fix it. there is not a willingness to fix the broader aspect of how that issue impacts other industries than your own, because that means the fiscal cost to the state is much greater. And I think ideally, we would like to see the legislature take a broader view at issues as to, do we want to have a level playing field for folks who rent equipment as opposed to folks who sell equipment, as opposed to just folks who rent tuxedos or those who sell tuxedos. I mean, I think ideally we'd like to see a broader view, but unfortunately much of the legislation is very industry specific and very narrow to keep the fiscal cost to the state as low as possible to enhance the likelihood that the legislature would pass it.
So I guess it would be preposterous to ask whether this has united the business community?
I would venture to say you will get a wide range of opinions on the margin tax depending on which industries you talk to.